So the Q2 GDP report was released this morning, and it's official. The U.S. economy has entered a recession.
Currently in a recession. We're in a recession.
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 So in today's video, we'll be reviewing everything you need to know about Q2's declining economic growth. We'll also cover yesterday's FOMC press conference and what another 75 basis point rate hike will mean for you. Now, if you guys are hating these daily market updates, be sure to like this video down below, subscribe if you haven't done so already, and let's talk about what's happening in this market. All right, so first things first, yes, the US economy was reported to decline for the second consecutive quarter from April to June, and officially this means that we have a recession, despite what any politician may say. Now, the GDP report returned negative 1.6% in Q1 and negative 0.9% at an annualized pace for Q2. Now, before moving on, let's discuss the definition of what a GDP is, because I feel like some people don't really understand that. GDP stands for gross domestic product, and this is the total monetary or market value of all the finished goods and services produced within a country's borders in a specific period of time. So when you're calculating a country's GDP, this encompasses not just public, but also private companies, the government outlays, investments, with addition to even private inventories and paid in construction costs. So to break that down even more further, just think about a GDP as a comprehensive report card of a given country's economic health and also the estimate of how much the economy will grow. So why should you even care about GDPs? Why should you care about a recession? If you study any of the past recession patterns and outcomes, you'll notice that during times of an official recession, you'll have business bankruptcies, you'll have high interest rates, you'll have mass layoffs, and even a significant decline in asset prices. Now, although a lot of that does sound bad, recessions are an excellent time for you to position yourself in a way to come out better than ever before. While most individuals are still struggling in recessions, if you're prepared, if you're educated, you can still use this time to profit during an economic decline. Now, with midterms coming up in the next few months, the current administration right now may come out with some news saying that, okay, we got to change the definition of what a recession is, and we're not going to be talking about the GDP. There are other factors on why this economy is not in that recession, but I also want to stress, anytime many people get fooled by whatever some individual might say, this is usually where people get unprepared. You may get caught on the back of your foot. And I just want to say, if you take a look at the data, see the metrics that we're currently in right now, regardless of the reports that you hear, it's always best to prepare for the worst during these times. Now, while I do agree we may not be seeing the full symptoms of a full-blown recession right now, you have to keep in mind all recessions have looked different historically before in the past. Sometimes jobs are down significant, sometimes they're not down that much. Even during this cycle, I believe we could be very, very early in, and if the economy continues its current direction, I do think we may see some of those symptoms still coming up. Think of it this way, if you ever get sick with a cold or, whatever kombucha virus is coming up next, the donkey pox, you may be able to test positive for that specific disease, but there are some people who get infected but never show the symptoms. Some people just react differently. Some recessions happen in a different manner, and you have to keep in mind, whatever the White House tries to do during this time, and even trying to change the Webster dictionary, not all of that may be taken with the truth. All I'm gonna say is just be careful during these times. Know that things are not looking good for the economy. We had so much stimulus getting printed, and we're seeing other countries right now going through very similar circumstances. Keep in mind, yesterday, the Federal Reserve held its FOMC press conference for July, and they talked about enacting its second consecutive 0.75 percentage point increase, taking its benchmark rate to a range of 2.25% to 2.5%. So back in June, not everyone in the FOMC liked the 75 basis point hike, but this most recent hike was voted unanimously. So the hike here wasn't an entire percentage point like many people were speculating, but Powell was asked if the federal government would consider a 100-point basis hike for July, and he said it wasn't, but that the federal government will continue to do whatever they need to in order to make sure that inflation can slow down. So what that means is if inflation doesn't slow down, if gas prices continue to go up, food goes up, all the other costs go up, then a 100 basis point hike is still on the table. Now, the next FOMC meeting isn't going to be until September, so we have some breathing room to see what's going to happen in August. So the interest rates look like it's going to remain the same over the next month, but the question is, how long can this last for, and what will the markets do in between that time? Now, historically speaking, based on previous previous data, until the early 2000s, interest rates didn't drop below the 5% mark. So right now, things are still going up. It's still not as bad as we've seen it before in the past. Also, back in the 80s, inflation, when it was at its double digits, we even saw interest rates at that point getting as high as 20%. So as mentioned earlier, the US currently has the benchmark rate at 2.25% to 2.5%. So we could definitely see this number increase significantly. So please be prepared, because anytime we see interest rates continuing to go up, usually the markets don't respond well. Now, in this case, things have been pretty interesting, because yesterday, immediately following the 75 basis point hike, instead of the markets reacting poorly, we actually saw it shooting up immensely. So if you take a look at your screen, you're going to notice that huge green candle, and this was right at the time the announcement was made yesterday. Now, the increase in price also means that the 75 basis point hike was already priced into the markets, and investors were relieved to hear that a full percentage point increase didn't happen. Even though crypto did pretty well, the US financial markets didn't react as positively to the entire GDP report. So the Dow Jones went down, the S&P 500 went down, the Nasdaq also went down about 1.6%. Truth be told though, I'm glad that the markets didn't tank even more, and hopefully throughout this drop, we're going to be able to see a bit of recovery happening in the stock market, and then leading into even further growth happening within the crypto scene as well. Taking a deeper look into Bitcoin, we're seeing this asset up about 6.6% in the past 24 hours. Last night, my phone was going off with notifications that Bitcoin was trading up higher. And since then, on the 4-hour charts, we've actually been seeing the RSI closing in to now overbought levels, currently at the 60 mark. So Bitcoin shooting up yesterday afternoon, breaking past the $22,500 mark once the rate hike number was announced. This means that we may most likely see a retest of that support level today or either sometime this week. If the prices do hold, then we could eventually see Bitcoin maybe even moving past further the $24,000 mark. Now here on your screen, you're going to see the 30-minute chart to see how the Bitcoin reacted to the GDP numbers, and the candlestick, like I said, it was increasingly massive, and the volatile was just all over the roof. So the report yesterday was released at 8:30 a.m. Eastern time, and here on your screen, you'll notice that arrow underneath the candlestick during the release. Now this candlestick here is called a doji candlestick, and they're all about indecisiveness within the market. The candle ended up closing at the same price it opened and had a range of $700 in 30 minutes. So when we talk about volatility, it's not just the asset going up or down, it's a lot of movements that can happen between a short period of time. With that being said, the global crypto market cap is now sitting at $1.10 trillion, or a 10% increase over the last day. So an incredible rally since all of that news. Bitcoin right under $24,000. We're seeing that increase in the market. It's going up a bit even more, and the big winner to note is going to be Ethereum. So Ethereum is now at $1,700. The rally for this asset is now over 100% since we saw it dip down below to the $800 to $900 mark, depending on which exchange you looked at. And it looks like Ethereum is continuing to have its stride. On top of that, we are still seeing some other altcoins within the market ripping. So Lido is up 50%. Ethereum Classic is now up 40%. Synthetics is up 41%. And even in the last 7 days, you'll notice that we are having a bit of green all over the market. Now, even amidst this bear times where the indexes aren't reacting too well, we're still able to see certain altcoins, certain cryptocurrencies saying, you know what, screw what's going on in the macroeconomic conditions and moving upwards. Now, on a day like this, going into the crypto fear and greed index, we're seeing 32 or fear on the scale, but I do think we are going to return back to neutral levels if we're able to break that $24,000 level for Bitcoin soon. Now, two quick pieces of news to mention before wrapping up today's update. In yesterday's earnings report, Meta disclosed that its metaverse-specific division for Facebook lost roughly $2.8 billion for Q2. So that brings their metaverse division to a year-to-date loss of $5.77 billion. The metaverse is something I personally believe in. I do think it's going to happen. I think in this lifetime, we're going to see the metaverse expand. But right now, during this bear market, it looks like many people don't want anything to do with it. Facebook is putting crazy amounts of money into it, and they're exceeding this huge loss that many people didn't expect for it to happen. So Mark Zuckerberg, through this time, looks like he's playing the long-term game, as he mentioned in the Q1 report. He stated, "I feel even more strongly now that developing these platforms will unlock hundreds of billions of dollars, if not trillions over time. Now, as long as Facebook, also known as Meta, still has its other platforms to keep revenue coming in and keep the company afloat, then I do believe Mark Zuckerberg is just rallying up these expenses, probably less of a tax bill for this year. And I do think at some point this will pay off, but only time will tell what's going to happen within the metaverse. Now, on top of that, according to a tweet from the president of FTX, they went ahead and opened finally their stock trading to users in all 50 American states. So as you guys know, FTX is a partner that I worked with a lot earlier this year. And we also mentioned before in the past about their ability to bring stock trading to their platform. And it looks like finally it's underway. I think here this is a massive move from FTX. It can definitely bring in new investors into the space, and it can definitely migrate anyone who comes from stocks very easily into crypto, especially if your accounts are all connected onto one exchange. Now, during this time, I do think we should be able to see a bit of excitement happening this year. I'm already seeing a bit of an increase in people's sentiment happening within the markets. And when people are able to just see a little bit of green, people are able to hear a little bit of money being made from their friends, that's usually when we get a first sign of either a relief rally happening or maybe even an early end to the bear market. Now, realistically though, the bear market I do think would last anywhere from 6 to 12 months, even at this time, but that doesn't mean that you cannot make money through this. Keep your chin up, keep moving forward, keep staying educated, and we're gonna get through this together. Now, if you guys did enjoy today's market update, be sure to check out the links down below in the description. If you're based in the US, check out Binance.us. If you're based globally all around the world, because we have viewers from Europe, Asia, just many different countries, check out the links down below in the description. Binance is the largest cryptocurrency trading platform in the world, and with them, they'll offer you a ton of tools. They'll offer you real-time order books, charting tools for your technical analysis, and even give you some of the cheapest fees in the game. Binance also has some advanced level security. They are top dog in the game for a reason, and I wouldn't be worried with them if you have your crypto staked with an exchange. Now, to get started, you can create an account within minutes to buy, manage, and maintain your crypto portfolio, and Binance has gone ahead and provided the Jungle Nation with an amazing offer where you can get up to $600 as a sign-up bonus, and all you need to do is sign up using my link down below and complete the list of tasks in the task center within your app. Now, thank you all so much again for watching this video. Today's code word for today's episode is going to be bamboo. Comment that down below if you guys made it till the end. Follow me on Twitter and on Instagram if you haven't done so already. And like always, I'll see y'all soon. Peace.